Alright, so I want to talk about three stocks that I find really interesting right now. So the first one is Air Canada. I mean, as we all know, the airline industry has taken a massive hit due to this coronavirus pandemic. The stock prices of Air Canada has fallen to $17 from $50 that it was just a month ago. Air Canada has been on rising curve since 2016, as we can see in this graph. It also has $6 billion in cash as of quarter 4 in 2019. It has $7.4 billion in undrawn credit lines. So Air Canada does have a really good liquidity on its hand. The stock was doing just about fine before the coronavirus attacked the whole economy. Its net debt is 78% of 2019 EBITDA. Furthermore, I mean, if you look at the history, after what happened in 9/11, the air industry took a massive hit back then too. But it really quickly recovered within like 1 year and started making profit just after 2 years. Air industry tends to rebound very quickly after major shocks. Therefore, I see Air Canada surviving through this crisis. I mean, if you do your due diligence, you will find that Air Canada does have enough liquidity on its hand. It does have enough weapons to fight this crisis. The travel is not gonna stop. I mean, people are still gonna go vacation after the virus is gone. People's gonna go back home if you're living in foreign countries and all that. So unlike many of the industries, the airline industry is never going to shut down completely. It's always gonna find its way back up, and therefore I think Air Canada will definitely go back up. You just have to hold on to it for a little longer. It might give you a little pain in short term, but it's a stock for long term. So keep that in mind. The second one I want to talk about is CAPREIT. So CAPREIT is a real estate investment trust. It owns 65,000 rental units across Canada. It has a little bit of units in Netherlands and Ireland as well, but mainly based in Canada. Uh, there are a couple of things like about CAPREIT that we definitely want to understand, that it has occupancy rate of 98.2%. So 98% of its units are always rented out, bringing in an income of $1,084 per unit. And it has 65.3% of net operating income margin. So it does have really good margins. Net CAPREIT also pays 3% dividend. I'm not sure whether it's gonna continue that, but it has been paying that dividend so far. There are a couple of reasons why this stock has fallen over 25% in last 1 month. One reason being that investors are probably thinking that real estate market will also crash due to this coronavirus pandemic. And secondly, the investors are probably concerned that the renters might default on their monthly payments. However, those two concerns do have some merit in it, but I don't think it's gonna impact CAPREIT's income at all, because the real estate market's not gonna crash. I mean, the value is not gonna go down because the government is helping individuals out with $2,000 per month as a benefit. I think people will be able to make payments on their monthly rents. So those two concerns are not as big to bring this company down. So it's selling at 75% of its all-time high, and I think it's a buy. And it's a good stock to diversify your portfolio if you're looking to invest into real estate investment trust. The third stock I really want to talk about is CINEPLEX. It's a very unpopular opinion, but I think this stock does have some potential for big earnings if you hold it for long. As we can see in the graph, it has been on declining curve since last 3 years. And I mean, rightly so, because as we know that Netflix and all of the streaming channels have taken over their market. That has brought their value in stocks really down. However, I think when the economy goes back to normal, when the consumer spending will increase, I think the entertainment industry will see a really good boost in their revenues, and Cineplex will be direct beneficiary of that because Cineplex owns the largest amount of screens in Canada. And Cineplex doesn't only generate its revenue from the screens. It does have rec rooms, live entertainment, food court, gaming areas, and many other ventures. So it have wide range of things where it generates its revenue. And being one of the largest entertainment industry player, so therefore I think Cineplex does have some potential for growth. But I mean, you'll have to do your due diligence before investing into it because it is a bit risky out of all three. So if you were to looking for a safe investment, I would suggest go with either Air Canada or CAPREIT. If you want to gamble a little bit of money for higher returns, then go with Cineplex. But these are my three stocks that I think will go up in prices down the road if you hold it for long.